Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the TGI. Thank God it's Friday. The TGI Friday, the 9th of June. Bull versus Bear webinar. Steve Miley on the call here for Trade Day. Welcome, everyone. Right, usual regular run through today. I'm going to labor this point, but go with me on this. We're going to look at, the paralysis in the market right now, okay, and why we're seeing that paralysis, and the fact that we kind of called it at the beginning of the week. Don't want to blow my own trumpet, but it's not like rocket science, right? And this is why, right? I just want to reiterate to you guys, particularly because you're day traders, right? And some of you are trading off of 1 minute charts, and your head is very, very much in those 1 minute charts. The benefit of taking that step back, not just from the chart, but on the macro fundamentals. Like, some people are like, well, I don't care about the data, I take technicals, right? I've been a technical analyst for like 23 years. And even since I've been in financial markets for over 30 years, I use technical analysis as my main broking tool before I was an actual technical analyst. So I'm with you looking at the charts, but my old mentor, back in the day from 20, 30 years ago, used to say, we don't lead with the chin. We need to know, even though we're technical analysts, we need to know what's going on in the macro and fundamental, right? We need to have an understanding, okay? So what I would say is, please do try to have that understanding, okay? And why is it important? And not just to know what's going on in the data coming up in the next 2 minutes, right? Because if we had stepped back, like I try to do with you guys every Monday, look at, what I like to call the shape of the week, right? We could have basically predicted what's gone on this week. And in fact, I did say at the beginning of this week, right? I said to you guys, it's likely to be a really quiet week this week, right? The market is more likely to be range bound this week. And it has been so range bound, and not just on the stock indices that you guys are all trading, right? If we go across markets, and I'm going to go and have a little look across markets, and I'm going to labor this point a little bit because I think it is important. There's a real good lesson learned, right, today, right? This week, in if you kind of come to things with a bigger picture view, right? And step back, even if you're a technical analyst, like I am. I'm a technical analyst, but you hear me talking all this stuff about the macro. Right? I don't go onto the charts for you guys. It's not my business. There's no point in me going and doing analysis on all the charts, right? I can give you some broader levels, but I'm not going to go in, because you're all trading different strategies. You're all trading on different time frames. Some of you are trading on the DOM. Some are trading off a chart. Some are trading off of, market profile, blah, 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 right? Okay. There's no point in me going through the technical analysis, but it is important to know the macro fundamentals. And that's why I concentrate on it in these sessions. Okay, I think it is important, and you would have had a real benefit, no matter what type of trader you are in here, to have known that there's a good chance that this week was going to be a paralysis week. Okay, and then if you had known that, you could have taken advantage, because the market's basically been range bound. All right, we're back up at the top of that range now. So I'm going to just run through a little bit of that in here now with you guys. Just bear with me. I'm going to just 1 second. Just need to take care of something here. So let's take a look back and look forward. Remember why I said that. Let's look back. Last week, debt ceiling. I've been doing this for 30 years. The biggest piece of data, the one biggest piece of data in the financial markets for those 30 years, there's always been the standout. And I can tell you it was before those 30 years, right? Okay. That piece of data is the US employment report. Okay. We had that on Friday. Okay. We had the debt ceiling cleared that was hanging over markets for a month, right? That was cleared out of the way. And we also got a big high level kind of piece of data as well. Second tier / first tier PMI, Purchasing Managers Index. It's a piece of data I really love. I think it's super important for a good understanding of what's going on in national economies and the global economy. We had the PMI data at the end of last week, and then the service data at the beginning of this week. So we had all of that really big data, all those big events, all huddled together at the very beginning of June, end of May, beginning of June. And then the Fed are coming up next week. Plus, we have arguably the second biggest piece of data, right? US CPI, arguably at the moment, because of the inflation that we've had in the global economy for the last 15, 16, 17 months, okay, arguably the most important piece of data from the world's largest economy. Global inflation data is important. US CPI data, Tuesday. Fed, Wednesday. European Central Bank, Thursday. Bank of Japan, Friday. Tuesday, Wednesday, Thursday, Friday next week. Loads and loads and loads of a plethora of an abundance of data and central bank events. Okay. And then in between then, what have we had? Well, very, 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 very light data. I will come back to the two central banks we had this week though. But very, very, very light data. And also, what else have we not had? Where are we in here? Fed blackout, right? No Fed speakers since last Saturday. Remember, get this in your head. The Fed meeting is on Tuesday, Wednesday next week with the outcome coming Wednesday. The Fed blackout period starts not the Saturday before that. So it was last Saturday from the 4th. Okay. I'm going to put this in, maybe mark this one so you know when the Fed meetings are. That's an easy place to have, right? There's the Fed meetings in the red boxes. Remember we have the Fed, we have our economic, no trading over the economic rule, the economic data. We have that for the Fed meetings. Okay. So you'll have that in your diary going forward. Anyway, enough of the lecture on that one. Remember, next Tuesday, those CPI, and next Wednesday, Fed meeting, no trading 2 minutes before and 2 minutes after those events. Right. Let's go back there. What my point was, we've had this load of data last week, important data and events, debt ceiling. Big data next week, US CPI plus big events, 3 massive central bank events, okay? And with the Fed expected to go on pause, having been regularly, at every meeting, hiking rates since the beginning of 2022. Okay, so it's a big thing. The Fed go on pause after all those hikes. So we've got these 2 weeks of big events and then bookmarked in the middle, right? Bookended. They bookend this dearth, this lack of actual data that we've had this week. Although we did get those 2 central bank events. And even with those 2 central bank events, so there's a good article in here for 5 things to start your day. This is the European edition. Look, central bank, this is their little editorial bit at the end, right? Central banks turning more hawkish than expected has failed to spur momentum in FX volatility. This is the euro versus the dollar, 1 week volatility. Staying very, very low. It has gone up a little bit, but staying very, very low. Even in here, look, so it says in here, despite the fact that the Reserve Bank of Australia and the Bank of Canada, okay, were from, the Bank of Canada was half expected, but only 50-50. The Reserve Bank of Australia, unexpected in here. Look, implied volatility in the Aussie, that's the Australian dollar, and the loonie is the Canadian dollar. Implied volatility in the Aussie and the loonie remains near cycle lows over the 1 month tenor. So volatility in the Australian dollar, the New Zealand dollar, volatility in the euro is staying super low. I know you guys are not trading FX, but what I want to point out, even with 2 shock central bank events, volatility is staying low. Let's take a look at the VIX. I'm hoping I can get it in on investing.com. We don't, I'm not sure if we get the VIX on. I'm not going to, well, let me have a look if I can see it on. I can find it on here. Where are we? Okay. Actually, I don't want to put it on that tab. I'm going to put it on the other tab, on the equities tab. If we get it, do we have access to the VIX? I never looked on here actually. VIX. Oh no! Anyone know code for volatility index? Do we have it on Trader8? I can go and get it somewhere else. Otherwise, I'll show you the VIX anyway. Somewhere else. $15.10. Is that the code? Is that the code? God, that's a weird code. That's the code. Let's quickly put that in. I'll try and get it on here, and if it doesn't work, then I'll go back to the other chart. Oh, that's at 1.10. Although that didn't work. Oh, you're saying that's where the VIX is trading? I just wanted the code for it. Sorry. But here's the VIX. Where are we? Let's go. Just look at it on here. Oh, that's the level. Yeah, that's the level. Well, 13.72 in here at the moment. But let me have a look at the chart in here. But I can tell you it's collapsing. There it is in here. It's collapsing. Look, it's been super low anyway. Look, it's been super, super low. Right, this is low, right? Look, you can see this has been super low. But look, collapsing in here, going back to levels seen from 2020. Okay, absolutely collapsing. So the VIX is collapsing, right? The volatility index. FX volatility. And we can see in the charts anyway. We don't need to look at the volatility index. Look, sideways the last week. This is the NASDAQ, right? You guys know this, right? sideways the last week. You know, we could have called this at the beginning of the week, right? Because we knew it was coming, really, you know, from the fact that there was no data. And even the bond markets, which have been going down in price, higher in yield, they're still caught within the range, right? So we've got a slight negative spin there on the price of bonds. We looked at all those bonds, and interestingly, we looked at those. Look, they came back, didn't they, yesterday? We rebounded. We were right down near these lows on whether. So this is the 10-year. There's the 30-year rebounding. There's the 5-year, went right down, rebounded. There's I think that's the 2-year, went right down and rebounded as well. Okay. But it's not just there. Look at oil. You know, oil had that. We had the rebound Thursday, Friday, gapped higher on Monday after the supply cuts from OPEC plus from Saudi, right? And then back down again, back into the range, right? Oil sideways as well. Gold as well, even gold as well. Look, it's following the dollar. Look, sideways, went all the way down and rebounded in here yesterday. So sideways, city in here. I got the old DX in there. Let me take this one out and change that for DXU. This is the dollar index, DXU, dollar index on SEP. DXU, look, even the dollar's fell yesterday. Why did the dollar fall? The dollar fell yesterday. It's a safe haven currency. Okay, we were in risk on yesterday. Stocks went up, dollar went down. So it did go to the bottom end and just break out the range, but the dollar even range bound in here as well, right? So everything's been super range bound. Okay, and we could have known that at the beginning of the week. We did the analysis at the beginning of the week. I said it at the beginning of the week. I don't want to lecture you. I don't want to blow my own trumpet. It's not blowing my own trumpet in here. I just want to say this was kind of easy bit of analysis. No data last week, lots of data coming up, loads of events last week, lots of events coming up. It's probably going to be range boundy kind of activity. And if you were keep looking for it to break out, it wasn't going to probably break out, and it hasn't really broken out. Saying that, though, we do see stocks, the S&P 500 did go into an official bull market. Okay, so it's now 20% up from its lows from October last year. So that's a bull market. Okay, so and if I just run through 5 things to start your day, and actually going back to the calendar, going into the day low, look, nothing in here today, right? We did get in here overnight, though. I just want to quickly point out Chinese CPI data. So with the whole world worried about inflation, with the RBA, the Reserve Bank of Australia, and the Bank of Canada hiking rates because their economies stay strong and they're still worried about inflation. Look at this out of China. I've mentioned this a lot. This is going to come into play at some point. It really will come into play. It's not coming into play at the moment. But China has deflation. Month on month in here, was expected at minus 0.1, came in at minus 0.2, worse than. Falling prices. The year-on-year data, 0.3, 0.2, worse than expected. We're getting almost year-on-year deflation in here out of China. And the factory gate data, the PPI data, the producer price index, factory gate data, collapsing again. It continues to collapse. Expected at 4, last was 3.6, 4.3, now 4.6. Factory gate prices are plunging in here in China. I've got a load of articles on this. I'm not going to go into depth in here, but we're seeing definitely a two-tier world. The rest of the world, inflation. And remember, the state-owned banks in China cut rates yesterday on Thursday, and the PBOC is expected to ease monetary policy. Okay, with the rest of the world tightening monetary policy. Okay, we have a two-tier world at the moment: deflation and a struggling economy in China, and the opposite for the rest of the world. And the worry about that is China. I keep mentioning this. China's the factory of the world. If China's slowing, what's it telling us about global demand? Okay, but this is something that's going to come up, and it's going to be important. It's not being looked at right now, but it will be important. I can tell you. So China deflation risk in here. What else? There's loads of articles. China's factory deflation steepens, demand wanes. China's producer plunged the most in 7 years. Producer prices plunged the most in 7 years. So all negative in here. But then on the flip side, S&P surges into bull market, 20% up. Okay, the Nasdaq's 32%, so 20% up from its lows. The S&P from last year, the Nasdaq's up 32% this year. Okay. And Tesla helping to overnight in here, and yesterday and overnight as well. It's done this deal with General Motors General Motors are going to join the charging network. So Tesla's helping things overnight as well in here. How US stocks rose 20% from their lows. Okay. Behold, Wall Street's new bull market, maybe, but it's still being questioned. Why is this being questioned? Well, look at this. Here's data showing the opposite. Okay. global equity funds see biggest weekly outflows in 12 weeks. Why is money flowing out in the last week? Well, maybe because we've gone on pause. Maybe because we've got all this big data coming in next week. We've got the Fed with the ECB, the Bank of Japan, the CPI data. So global equity funds, even though we're sitting on the new highs, even though the S&P posted a bull market in here yesterday, this last week we've seen global equity funds see biggest outflows. And on the tech side, AI frenzy stalls as tech stocks see first outflows in 2 months. So there's been all this money coming into tech and into AI. Okay, in the last week in here, cash flows see first outflows in 2 months out of tech stocks. Okay, so do you want to point out in here? I mean, I've got not much to say about the markets in specifically at the moment, but two things in here. We've got this kind of dichotomy. We've got this dichotomy between China and the rest of the world. We've got these outflows from funds, whilst stocks are going to basically into bull markets. Okay, it's all feeling a little bit maybe toppy, a little bit worrying. Tesla, if you look at the Tesla chart, Tesla just leapt high. I mean, going back into here, just just put in Tesla. You saw Tesla yesterday, right? Where are we? Full screen. Tesla, I mean, meteoric rise yesterday. Boom. Took out some important levels as well. And it's up again in the overnight in here. Whoa, what's going on there? There's Tesla. Boom yesterday. Okay. And it took out, previously this week, took out these peaks here. And then now it's actually above this peak. In the pre-market, it's above this peak over here from back last year, from November last year. So Tesla's surging higher in here, and helping the wider tech rally as well. Again, a little bit concerning, at the moment going into today. I mean, I'm just going to wrap it up now, guys. But basically, Nikkei was up 2% and the Hang Seng was up 0.5%. European markets actually down about 0.25%. The UK, the German, and the French FTSE, DAX, and CAC are down about 0.25%. And stock futures are just dipped slightly lower. And having S&P up 0.6 yesterday, we're actually slightly lower, although the Nasdaq kind of going into unchanged. If I look at the charts in here, going into today, where are we? To the charts, you'd have to say here, dollar looks weak. It's getting a little bit of a rebound, but looking for dollar weakness to come back through. Bonds are now probably far enough away from these lows that we're not going to retest them, but bonds are dipping back lower in here. So we're getting a little bit of a gut check to yesterday's moves. Bonds are going back lower, and the dollar in here is rebounding, having been weak. Okay, and then if we go and take a look at stocks, we've had a little bit of a correction. So S&P, we've had that little bit of a dip in here, but look, dip and a bounce. We're slightly lower, but only slightly sitting right where we were yesterday. I think we're just up. I mean, I cannot see us not being up today. And then the Nasdaq as well didn't make it. The rebound was led by the broader market, not by tech. We're not made new highs on tech, but look, Nasdaq holding in there really well as well. I think we'll see back up to the highs on the Nasdaq, so up to like 14,700 maybe, seeing on the Nasdaq today, and then the S&P probably expecting a new breaking above the peaks in here, so through like 43.05, 43.06 kind of area, and then aiming. Then you've got not much to aim at on the top side, but we can easily add in 0.5% today. So for me, still playing it from the bull side. You have to play it from the bull side, but obviously we're right at the top of the range. But no one I think is going to want to go home short going into this weekend. So I'm going to wrap it up there. Are there any questions? But I know it was a bit of maybe felt like a bit of a lecture this morning, but I think it's really important. I just wanted to show that, I know you guys are very focused on short-term charts and very much into your charting. But a lot of you come onto this because you want to learn about the macro, you want to learn about the fundamentals. You get me to give you an insight into that and just to give you a summary of what I've seen. I'm not giving you anything. This is not rocket science, is what I'm trying to say, right? All I've done is gone and looked at some articles that are the main articles from the major news wires, and just looked at the events calendar, and you could have seen that this week was going to be a mean reversion, a range trading week. Okay, next week's almost certainly going to be the opposite. It's going to be a big trending week, but depends. We might get a lot of conflicting data. Okay, the Tuesday, Wednesday, Thursday, Friday events could all counteract each other, but the chances are we're going to get stronger trading. But is it going to be stronger trading topside or stronger trading downside is the question. All right, guys, any questions? Rocket surgery. Yeah, indeed. Rocket surgery. Very good. So rocket science and brain surgery. Indeed. It's neither of those. Did I say rocket surgery? I don't know if I did. If I did. It's not rocket science and it's not brain surgery. Did I say rocket surgery? If I did, it's funny. Nice one. All right, Jack. Jack. Thank you guys for coming on. Thank you for starting to participate, everyone. Have a great trading day. Have a wonderful TGI Friday. Enjoy. I'm in the UK. We've got lovely sunny weather in the UK, so I'm going to enjoy a bit of the weather as well. Yeah, have a great trading day. Have a great weekend. I'll be back with you on Monday. Have a good one, guys. Take care.